U.S. job reports have come out Friday, adding 57,000 jobs in June, short of analysts' expectations that payroll had grown by 110,000 jobs.
U.S. employers slowed their hiring last month and the unemployment rate ticked down to 4.2%, as participation in the labor force dropped to the lowest in more than 5 years, according to the data released Thursday.
News disclosed Trump's investment advisor made more than 21,000 security trades, including hundreds of purchases just days before the 2025 tariff pause. Today, we analyze the market knowing what to expect next and where the action is coming into this week.
Many stocks dropped Friday from jobs reports, with semiconductors and tech stocks taking the brunt of that. Last time we've seen jobs reports was June 5th. The numbers came out positive with over 129,000 jobs added, yet the SPY dropped about 2.85% despite the positive news. The U.S. economy had added 57,000 jobs in June, which is roughly half of what economists were expecting. The disappointing total broke a 3-month streak of gains that topped economists' expectations and had offered hope that the labor market was breaking out of a low hire and low fire pattern that depressed job growth totals last year. The labor force participation rate measures the percentage of Americans who are either working or actively looking for work. In June, the number fell from 61.8% to 61.5%, the lowest level in more than 5 years, with around 720,000 people left in the labor force during the month. The government also revised the previous 2 months of job growth lower by a combined 74,000 jobs. Businesses are hiring more slowly than expected, and fewer Americans are participating in the workforce. For policymakers at the Fed, this report suggests that the economy may be losing momentum, and a soft labor market can reduce inflationary pressure, which could influence future interest rate decisions, though the Fed will also weigh upcoming inflation data before making any moves.
Supreme Leader Ayatollah has a week-long funeral. Iran has issued a stern public warning to the United States and Israel coming into this week. The funeral will last 1 week starting July 3rd, ending on July 9th. 15 to 20 million will be attending from potentially 30 surrounding countries. Attacks in any capacity could result in quote-unquote harsh retaliations from Iran. Fortunately enough, the U.S. has announced they agree to push back and postpone peace talks for a week, honoring Iran's request. That's good to hear and likely to create a more stable environment for this week.
The S&P 500 has seen a range out after finding 750 to be a stronger resistance zone. After we topped at all-time highs, we do see price dart downwards towards 720, the exact gap up spot, putting us into this continuation movement. We get the bounce right on that gap here, push up to these highs of around 750, get slightly lower, creating a lower high, pressing back down near this spot, starting to range out just a bit, which then we press up to 750 to end the week, and we do see that SPY had found an indecisive candle to go ahead and end the week. So right here, the market's in a position of volatility building energy. Right, what I see here is potentially this range building up. We could be seeing a further downside movement coming into next week, although if we are going to flip green next week, it most likely would be a gap and go effect above these 750 highs, pressing up with a strong green bar to start next week. But what I see here is an indecisive look overall. And looking at the weekly, of course, we are very overextended from these highs breaking outwards. You've seen this range build up. We did try to get the breakdown pushing upwards above that 693. Of course, then getting to highs above 750. But that psychological key level does give us some trouble as we see price now finding a bit of pressure back and forth. And we do have to monitor if this lower high trend gets broken or if we continue to range out a bit between these two.
Nice. And yeah, for QQQ, we have a very similar chart here off that very aggressive movement up from the ceasefire news. Absolutely crushing. But over the last month or so, we have been setting 1, 2, and a third lower high on the chart, but that is matched with the buyers showing their respect for this trend with multitude of higher lows. So it is a battle between two forces, especially when you factor in that very strong resistance and that very strong support. So we do lean a seller bias into this week, but keep in mind that we are stuck between two very respected range and the momentum has subsided. At this point in time, markets are effectively just consolidating, waiting for the next movement here.
Now flipping on over to the weekly of IWM, we see a very overextended movement at the moment after breaking above a key high, being right around that 270. breaking above, retesting a couple of weeks, kind of double bottoming out here and pushing up further, finding that 300 psychological level to now give us some trouble. So from the weekly, all I see is overall a healthy stock that is overextended, but at the moment we are seeing some pressure, which would not surprise me to see a bit of a pullback here coming off of this doji indecisive candle. Doesn't have to be a major one, but I can expect some energy to build up around this $300 level before pushing.
Here we do see a rising wedge on the chart. So being that price action is clustered at the top of this pattern here, where typically momentum does subside, it does enter this week into a very important time frame. Just like QQQ Inspire, we're going to reclaim over that psychological $300 area, just getting some strong momentum leading into this week to continue the uptrend here, likely targeting up 310 and beyond. Or is price going to start the week losing your low here around 295, where there is a pretty good chance with a double confirmation of this rising wedge, as well as those clean wicks, that we could see a bit of a detour here, likely pulling back to 289 and levels maybe even lower from the medium term up 280. Last week, leadership shifts towards defensive sectors, with healthcare, utilities, consumer staples, materials, and financials outperforming as investors rotated away from high growth names.
And the sectors that lagged this week were the tech and large cap growth stocks, putting a lot of stocks in a bearish look for the short term and overall contributing to the indecision that we see coming into next week, given that tech stocks and particularly large cap stocks do hold a lot of weight as far as shifting the market. So StockWatch market score coming into next week, I'm giving this week a 4 out of 10, leaning bearish here as we see a lot of large cap stocks set up for some bearish continuation, with the S&P and the NASDAQ set up in an indecisive spot, and IWM looking very prone to some selling pressure after hitting that 300 high. So the mix of bearish technicals as well as the poor jobs reporting, I do have to lean on that bearish side for this week. Now for our first prediction, we have stock Walmart, which Walmart has seen a lot of selling pressure ever since these highs of 135.16. We did see a very drastic gap and go continuing all the way down and right around the 115 region, which acted as a past support level. We're assuming we'd seen a little bit of a bounce, although curling back downwards and gapping down recently. Seeing that candle trying to press up, seeing some buying pressure with a low of 107.25. Bouncing at a key support level like we see on the weekly, guys, being the last bounce spot. Seeing price trajectory up like a mountain, pulling back, testing around that 109 spot, continuing further to all-time highs. Now ripping in a perfect opportunity for a double bottom pattern, as well as on the daily seeing a beautiful green candle pressing up, nearly filling this gap here. Volume has stayed constant, and relative strength is very good considering the overall market and how we saw the market close on the previous trading day. So as long as the buyers can press up and fill this gap, we could be seeing a textbook double bottom effect from a long-term perspective on a key area of interest, which could lead price to a nice trajectory of around 120, being these previous highs here, with the opportunity for around an 8% increase in a relatively short amount of time if this gap here is filled.
Nice setup, Ian. Yeah, for this next one, we're going to go with ASTS, AST Space Mobile. Now, we have seen this very violent movement up here, then all the way back, coming exactly down to the low of that breakout area, and the buyers took massive advantage coming into the last week, performing a clean bullish engulfing, then just launching off. Very clean price action. And to end the week, instead of a sell-off where a lot of tech stocks, growth stocks, ended the week really bad with clean seller bars, ASTS is probably the strongest of the bunch, just holding tight. Doji candle showing your strength after a very large movement up here. So this is price action that's indicative of a higher movement up, especially when you look at the long-term stock, or the chart here rather, on ASTS. You have a very clean ascending profile here. We're right back at that yearly ascending trend line. A multitude of reversal signs across the board. There's just so much to like with ASTS here. So coming to this week of price action, if we can get over that $90 level, there's a very strong chance we quickly test $100, and then past that, if you want to hold a little bit longer here, there is a very clear gap to fill at $121. This one's been very consistent, Ian. I've been trading this one time and time again this year, and we enter this week with another great trading opportunity for ASTS.
Looking at our next prediction, we have ONDS to the downside. We were in this long-term range, pictured better on the weekly, seeing a false breakout, quickly knifing right back down after testing a key resistance zone. From there, we had gotten right back within the range of roughly 840's relative zone and 1162's relative zone, quickly knifing down with consecutive red weeks. With looking on the daily, we had seen a perfect break and a retest of that exact support level, finding a break, retest, and continuation downwards further than that past low. Looking at the hourly depicted, closing below where we had wicked up at, trying to find that balance, looking very primed here for further continuation downwards as we see the bearish look on ONDS with a price target of roughly 550, the previous lows being targeted here. Now stay tuned for StockWatch's next video coming out next week, where we'll give you guys in-depth analysis of the entire stock market. If you guys enjoyed this, hit that like button and subscribe button, and comment down below your prediction for next week's movement.